what did you make of Bernanke's comments? We just heard from Peter Cook that he was characteristically difficult to decipher.
Right, so I would agree with Peter in that regard. So there was much less alarm in the chairman's comments than we had heard, say, from Vice Chair Janet Yellen and some other Fed speakers in recent weeks, or recent days even. So there were several points, either in the speech or in the back and forth with members of Congress, where he could have taken a more dovish tone, saying risk had risen, that the economy may slow, but he was very non-committal about his interpretation of recent events and what the Fed might do. And I think what that tells us is the incoming data is still going to matter, and it's likely to be a last-minute decision.
But Michael, that's part of the game, right? Bernanke maybe strikes one tone. You just mentioned Yellen, and some of the other members strike another, and that leaves the market just having to figure it out for itself.
Well, that's right. So he's the one person who has the ability to speak for the entire committee. Everybody else has to speak for themselves. So he may very well just be saying, look, I don't want to front run the committee. I don't want to put out information there that would lead the market to make a conclusion that the committee hasn't taken. So it's best, from his point of view, just to remain non-committal and make the decision in ordinary time at the meeting.
Michael, hold tight there. Linda, so glad you're here, first of all. Nice to see you in person. Was the Chinese cut a surprise to you? We've been following this data, following this story that China may be slowing, and then actually when I woke up and saw it via Twitter, I was like, wow, okay, they moved. As for somebody who follows it all the time, what was your reaction?
I think it's always surprising because they give you such little warning. But actually, CICC, which is China's state-controlled investment bank, they said a couple of days ago that a rate cut was in the cards this month. And so here we go. Now we have a rate cut. And I think the most striking thing about it isn't just that it started in a loosening cycle. It's the fact that actually they've widened the band around the lending rate. So in other words, banks can actually lend 20% below the new rate of 6.31% for a very tightly controlled credit market like China. So that's really signaling that, hey, banks, not to go crazy, but you're able to do more than what you were doing before. So it shifts the emphasis from worrying about banks to really worrying about the economy.
Linda, you have a huge job. You're obviously based in London, so you're watching what happens in Asia. You're also watching what happens in Europe. Many people telling us here that the ECB hold is not going to last long. What are your sources telling you?
Yeah, very similar things, which is if you watched the press conference yesterday, it was all about hints. So the biggest hint was increased downside risks to growth. And hey, inflation above 2% target, but don't worry, those are balanced. That's pretty much saying we're going to loosen. And in fact, economists that I've spoken to, they're factoring in a 50 basis point cut by the end of this year. But Deirdre, the other thing that is very important for the ECB, and we didn't get a strong hint of this, but this is crucial. If there is a bank run, can the ECB do something? Draghi says they have the tools, and they actually do. That's something to watch.